There is only one way to fight deflation: a stock market implosion, a real estate market implosion, and certainly a derivative implosion. That is all deflationary. Only one way to fight it, so it makes it easy. We are at the end of all fiat money life cycles.
Have you ever wondered why central banks make big decisions? Well, we're diving deep into the recent shakeup, where Japan did something it hadn't done in 17 years. They increased interest rates. Let's unravel why this move is such a big deal and what it means for all of us. Lynette Zhang will talk about why our financial system can be a bit fragile and how we can protect our money by investing in things like gold and silver. So, if you're curious about money moves and securing your wealth, stick around for an eye-opening journey through the ever-changing world of finance.
Now, last week, there was a huge shift that happened really, it's a global shift. And we need to be paying attention to this because whenever there is a pattern shift, it means something is happening. Even if you don't understand it, it is critically important that you recognize these pattern shifts because they indicate where we are in the trend cycle and how much longer this whole thing can stay together. So I wanted to show you Japan's interest rates because this is key. And this goes back to 1973. And for the first time in 17 years, you can see they've been stuck at zero since the 90s, right? That's when their real estate and their stock market bubble burst. They recently, through lots of buying, managed to get it back up, as we've shown, the stock market, but not the real estate market. But you see that itty bitty blip up, that is going back to zero. So they've been below zero in order to try and stimulate their economy. There is only one way to fight deflation: a stock market implosion, a real estate market implosion, and certainly a derivative implosion. That is all deflationary. Only one way to fight it, so it makes it easy, and that's with inflation. But typically when you raise interest rates, you're trying to fight inflation. For the first time in 17 years, well, that goes back to here, but they haven't had much luck really since the 90s. And they've done a lot to create this whole alphabet soup of manipulation. But I'd like you to notice that even the feeble attempts to raise rates in the past, though this has been true for every single country, has been a big fat fail. Is this time going to be different? Probably not. Central bank policy divergence in fragile global markets can trigger a crisis. So we're watching these divergences happen between, the Federal Reserve is on hold, but Turkey raised, the Bank of Japan raised, Taiwan dropped the Swiss National Bank lowered their rates, the Bank of Taiwan also raised them. So you see this divergence? Now this system is really, really fragile. And so really since 2008, we've watched the central banks move forward in a coordinated way. This is not coordinated. This means risk. This is a pattern shift. Make no mistake about it. Japan's central bank raised its benchmark interest rate Tuesday for the first time in 17 years, ending a long-standing policy of negative rates that is meant to boost the economy, but it didn't work. So, it wasn't, as I just showed you, that goes all the way back to the 90s. It doesn't work. And yet the world has agreed that Japan should not enter into hyperinflation. And let me say, yet. Let me just say yet. Because the world had to agree in order for Japan to even be able to do this alphabet soup of yield curve control and all of these experiments. But I want you to look at the yen underweight of mounting short positions. A short position is selling something, quite frankly, that you don't have, and that can push the price down. And in theory, and in practice frequently, right? If you come in and you sell, it could be a stock, in this case it's a currency, and it pushes the price down, you buy it at that lower price, and the difference between what you sold it for and what you bought it for, there's your profit. The problem with a short position is that there are no limitations on what your losses can be. But that's what they're talking about here. Yen is underweight of mounting short positions, which means that traders are selling the yen. They are selling the yen. And in the meantime, the Bank of Japan, in buying most of their market, whether it's their stock market or their bond market, has pushed their stock market back to where it was back in, the early 90s. Well, is that true? Well, yeah, they did it. But it's all about manipulation. It's all about keeping the public where they want the public. It is perception management. And you need to be aware of that so that you don't get suckered in. Because I'm going to tell you, it's super simple. When it gets too expensive, in other words, when enough risk has been transferred from the few to the public, to the many, then they won't support these markets anymore. So it's all points to a growing tug of war between policymakers and markets over how far the yen can fall, because the central bank can definitely, and they do, go in and buy the yen. So what we're looking at here is one country, Japan, that's managing its markets, but there are other countries that are doing something different. That creates a lot more risk. Make no mistake about it. At one point, the central bank became the largest owner of the country's stocks and holdings of well over 400 billion. And yet, 52% of Japanese household wealth is held in cash. What does that tell you? It tells me that the Japanese public doesn't trust the illusion that the central bank created. But what they're counting on, and we're hearing this all the time in this country, in the US, is that all of that cash that's sitting on the sidelines is fodder to boost the already severely overvalued stock market that needs to be bought by central banks in order to be supported. Well, will this cash go into these inflated, overvalued markets? That's what everybody's counting on. And I'm not just talking about Japan. I'm talking about globally, and certainly here in the US. We are at the end of all fiat money life cycles. Period. End of discussion. So all of this manipulation, that's why it's not working anymore. And it's not working very well. And the last level of confidence was the markets to the central banks. And I'm telling you, we're watching. The markets don't trust the central banks. They know that they're going to do whatever it is that they need to do. So I wanted to show you, because they make a very big deal of fiat against fiat. US dollar to the Japanese yen. And this is a 10-year chart. And over that period of time, it's gone up 46.62%. Okay, so you were better off in the dollar versus the yen. Well, how about silver? Now, this is spot silver, so you have to understand that this is still an easily manipulated contract, right? But even spot silver almost doubled the spot silver versus the Japanese yen. And how about gold? Well, spot gold over the same time period protected you the best. So look, I like both, but I have them for different functions. I will be talking a lot more about the strategy because, quite honestly, wherever you are in the world, I want to help protect you. That's part of this community.
Thanks for joining us on this enlightening journey through the world of finance. If you found this video informative and want to stay updated on all things money related, be sure to hit the subscribe button and turn on notifications. Don't forget to give us a thumbs up if you enjoyed the content. Feel free to share your thoughts and questions in the comments below. Until next time, keep learning, keep growing, and may your financial future shine bright. Thanks again.